Hello and welcome to this Thursday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us an update for the brokers. I'll be stepping in for a shipper econ update, but first we're going to go to Zach Strickland with carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Thursday Carrier Update presented by PowerFleet. I'm Zach Strickland, and we continue to see our volumes drop today. So outbound tender volume index here in the orange line, you can see right there we have 2 consecutive days of dropping in this index. So freight volumes in the United States starting to come back down as we anticipated it would eventually. I really wanted to hit that 13,000 mark on the outbound tender volume index, but we did not quite make it, just a hair shy. Underneath that is going to be the outbound tender rejection index, indication of capacity in the market. It measures how often carriers are rejecting their contracted tenders, and we're about 18.71%, which continues to go up somewhat surprisingly. But again, we've had so much volume coming through the market over the last several weeks that it's going to take a little bit for carriers to start to catch up. We still have a very high number in the outbound tender volume index, over 12,000. So it's going to put a lot of carrier networks out of balance here for a little while. It's going to take a little bit before those rejection rates start to come back down, but they probably will begin to come back down here in the next few days or so. Does not mean that everything's going to go back online all at once, however, so make sure that you are prepared to play in the spot market a little bit, especially as you're trying to reposition your fleet into the most, into the best utilized areas in the United States. So where are those areas in the United States? Looking at the weighted rejection index, something that I haven't pulled up in quite a while, just because we've had so much volume pushing a lot of volatility in the market. All this whole map itself is pretty much just blowing up with tender rejections and or volumes. It's starting to come back down, and we are starting to see a little bit more unevenness throughout the United States, where capacity is tightening, where volumes are increasing, where volumes are decreasing. So we are in somewhat of a state of fluctuation at this point in time. You see these blue markets right here. These are the biggest markets in the United States. Of course, they're going to be blue right now because they all have a lot of volume with them. You're looking at the top 5 markets in the United States in terms of market share volume, still remaining somewhat blue. Harrisburg, you see, is getting to be a little bit lighter color. Allentown, Pennsylvania up there is now in red. So that part of the country is starting to stabilize compared to this time last week. So a lot more so than it has been. It has been that dark blue color that we're so accustomed to seeing. Dallas, one of the darker blue. And then up here around Grand Rapids, Michigan. Grand Rapids, of course, just to the, it's still heavily automotive centric, but a lot of short haul volumes up there. We're seeing volumes come back down, but capacity, however, is still quite tight up there as tender rejection rates jumped about 500 basis points or 5 percentage points yesterday. Atlanta market continues to be pretty rough go in terms of overall capacity. Looking at the top markets in the weighted rejection index value over the last little bit, we're accustomed to seeing about a 32 up here, a 30 to 32 up here in the top levels, but now these are starting to come back down. The top value, Grand Rapids over there, 23. Ontario, California is now a 16. So that's a pretty big number for Ontario. It had been settling down here over the last little bit. Ontario, of course, is one of those key markets that we're looking at for import volumes. How big are those, how stacked are those DCs over there in that sea of DC and warehousing in Ontario? And we can see that tender rejection rates here in that purple line still heading up. So capacity again up, volumes stabilizing slightly. They are coming back down a little bit, but they're not falling dramatically. I've got LA over here in the green line. LA volumes starting to come back down a lot more significantly than the Ontario volume. So LA is definitely more dependent on the port volumes, whereas Ontario is more that secondary DC facility area. Looking at the rest of the country in terms of just volumes itself, outbound tender volume index tree map, a lot of red, a lot of green now. Like I said before, we are starting to see a little bit more mix in the United States in terms of what volumes are doing across the country along with capacity. I picked on the Columbus market here because it was one of the bigger jumps in volumes over the last little bit. Tender rejections, however, coming down. So it's not always a one-to-one relationship with capacity and volume. So everybody just be careful out there. Make sure you're finding the best markets to operate out of, and that will do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Good morning, everyone. I'm Luke Falasca, bringing you another broker update, and happy Thursday. So as you can see, blue line here, we continue to see these volume levels dip. That's 2 days in a row now we saw volume levels drop, which is significant. We knew the peak was going to happen eventually, and we were going to start sliding, and here it finally is, and I wouldn't expect it to slow down anytime soon. Of course, we'll keep an eye on it. Now, this orange line here is the rejection levels. Rejection levels continue to go up. So you can see here we're hitting at about 18.7%, so another 0.5% increase day over day. That number will probably continue to rise for at least a few more days. Generally speaking, rejections are a little bit behind where volume levels are. So if volume levels continue to slide, eventually you'll start to see rejections fall along with it. Now, we may not fall, the rejections may not fall quite to the levels. Even if volumes get back to normal, rejections may still stay a little elevated. So be prepared for that. But bottom line is now is an excellent time to start protecting your freight, your volume, any extra volume you've been moving. Do everything you can with your shippers and your customers to maintain those relationships and keep as much market share from your customers as you possibly can. The market's going to start sliding, so see if you can hold on to as much of it as you possibly can. Now, the map here that we're looking at is the overall weekly volume level changes. So the markets in red are areas where volume is beginning to contract weekly, and the markets in blue are areas where the volume levels are continuing to rise. And the markets in white are relatively balanced markets, not much change. So we're starting to see volume levels slide across the overall in the U.S., and you can see that here, even in Southern California, LA, and Ontario, which are typically very large markets and drivers of what's happening, are continuing to slide. Even here in the southeast, around Atlanta and Savannah and Florida, a little bit in the northeast. Michigan there sliding quite heavily, which is to be expected as this coronavirus shuts down a lot of car manufacturing plants, so there's not a lot of freight to be moved there right now. And then a little bit here in the northern Midwest parts of the country. But there are still some areas that are still growing. Nebraska's seeing a little bit of growth, a little bit here in northern Wisconsin areas. Probably a lot of that is reefer volume levels, and a little bit in central Texas. So we'll keep an eye on that. The first market we're going to look at today is Dallas, Texas. Dallas, if you're a broker, has probably been a very difficult market to operate in. This blue line is the dry van tender rejections out of Dallas. So since the beginning of March, we've gone from 2.5% to 22% tender rejections. Today was our first dip in tender rejections, meaning if you moved freight yesterday and you're moving it again today, you might get away with paying a driver ever so slightly less of an insanely premium rate because they have truly shot through the roof. Now this orange line here along with that is the overall volume level in Dallas. It has increased by nearly 1/3 over the course since the beginning of March. Shot up. Looks like it's beginning to dip right now. We'll see what happens with rejections if they continue to fall or they level out or volume levels continue to dip. But Dallas right now has the least amount of capacity for brokers to source from relative to the amount of freight that's moving out of Dallas right now. So it's very difficult. Bottom line is in Dallas, continue to increase spot market rates. Be very careful with the amount of volume that's there and the lack of capacity to move that volume. Could be a very difficult market. Now, Detroit, one less market we'll look at here, this blue line, tender rejections. You can see a slow, gradual surge here. Going all the way up to about 10%, and then literally overnight we jumped about 65% on the drive-in tender rejections. They just went through the roof there, really signaling you need to increase any spot market rates out of Detroit. That's assuming you have any freight, because this green line just fell off a cliff. The green line is the volume level, so there's really no volume level left in Detroit, which is to be expected as the coronavirus shuts down a lot of these car plants that are up there. I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your Shipper Update. I'm your host, Anthony Smith, and also the lead economist here at FreightWaves. Behind me, we're going to get into one of the biggest items dominating headlines as of this morning. What we just saw was weekly jobs claims skyrocketed to levels that we've never seen before. We've recently hit 3.2 million, over 3.2 million in weekly jobs claims, so this is an absolute record-breaking surge. To put that in perspective, the last large increase or significant increase that we've seen anywhere near this level was in 1982, and that was an increase of just around 700,000. So that really blows all other recent measurements out of the water completely. And so the thing that's really going to show here is that this is driving the impact that we're really seeing hitting Americans all across the country. So again, this is one of the areas that we're going to be watching and monitoring closely on a week-to-week basis, because it's going to give us insight into what's really happening for many Americans throughout the country. So the thing is, this is going to hit those in consumer or service-facing areas a lot harder compared to those that are still able to work remotely and telecommute and things like that. But the other thing to keep in mind is that this is really going to be reflective of businesses that are shuttering and closing their doors because of strict shelter at home and really reducing and shuttering doors for businesses that are considered non-essential. So this is really going to almost take a lot of economic growth almost to a complete halt as we're watching anything consumer facing or anything that might be considered non-essential going forward. The other big thing to take note of is that a lot of these states are going to be overwhelmed with the amount of processes that they'll have to go through in the coming weeks to really get through all of these. And so there's probably going to be a lot of loosening of regulation of individuals that will have to wait any amounts of time in order to receive these benefits. Other big thing is that we got is stimulus package, and so we got news that there's going to be a stimulus package put out for many Americans that are really being impacted by the latest developments throughout a lot of the coronavirus, and so that's going to be a bit of good news. The thing is this going to be enough? So in my economic opinion, I'm not sure if the original stimulus package that we have put in place is going to be enough for many Americans throughout the country. I think it might be helpful for the beginning and the initial hit that a lot of Americans are going to hit, but I wouldn't be surprised if that there's going to be further stimulus talks for many Americans in a few weeks as this really continues to ramp up. Next thing that we're going to talk into is a little bit more on the manufacturing side. One of the hardest hit areas when we're looking at freight and transportation is going to be flatbed. This is going to be because industrial production, we got the latest numbers through February, such a long time ago, but we got the latest numbers through February, and we see in the green line that there was a recent uptick. So kind of like a cruel joke, once we start to see any kind of rise in manufacturing, we get hit with this coronavirus pandemic, I should say. And that's going to be something that we're not going to anticipate any rise in the coming months when we're looking at manufacturing and industrial production overall. Now, if we're looking for a little bit more of a up-to-date look for manufacturing, I recommend you all take a look at what's happening for non-defense capital goods new orders. This doesn't capture manufacturing altogether, but it does capture what's happening in business-to-business activity. And what we're seeing is that there was a recent downturn in the non-defense capital goods new orders index, showing that there is going to be a reduced amount of business-to-business activity, showing that there was already shaky business investments hitting a lot of businesses before the corona pandemic really started to ramp up. So, and overall, there's going to be rough things happening for not only the consumers, but also business to business activity. And we're going to be sure to monitor this closely throughout the next few weeks. Thank you so much for tuning in. That's going to do for this edition of FreightWaves Now and the Shipper Update. Thank you so much for tuning in. Be sure to check out all of our updates on all your favorite streaming platforms, including Apple TV. And we'll see you on the next episode.